What up, people? Sure, my things are set up. All right, good morning, guys. Today is Tuesday, October 17th. As usual, going over analysis for US 30, gold and EU. So starting off with the daily bias. Daily bias for US 30 bullish, gold bullish, EU bullish, the dollar bearish. So after there, go down to the 1 hour and 4 hour timeframes. So here on the 4 hour time frame, on the 1 hour, we don't have any, excuse me, double SAR entries. For gold, we do have a break. We have a test and rejection here on gold. Give me 1 second, 20 minutes. Okay. So on the hourly time frame, but this is going to be so high. So gold, because here gold would have to come back. So I'm hoping gold retraces down, because here for gold on the hourly time frame, this is a test and rejection on the hourly time frame. So here's, so another one of my rules that I'll be enforcing, trading rules, if something is if something has a red flag, I'm not going to be taking that trade. So whether it's overextension, whether it's price being away from the SARs, I'm not going to be taking those trades. But here, test and rejection buy. So if we expand this, we can see the test candle, the one that came to this double SAR zone and came back above. This one that's currently closing is a rejection candle. If this candle, and this is the hourly candle, in the next 20 minutes closes anywhere that's not here where I've put my my entry, I am not going to enter that trade. If it closes up here, I will wait for that trade on the 1 minute and 5 minute time frame. I'm not even going to use a half lot size or anything. So my entries, I want all my entries to always be next to the SARs, and I can always wait for a retracement. That's fine. Here for US 30, I thought this was going to be a test and rejection, but the candle that's currently running, that's the test candle. So we have a possible test and rejection entry for US 30, but that would have to wait for another hourly candle. So that's the only difference. So in the next 18 minutes, this is at 10 a.m. I'm hoping gold retraces down and comes and closes around 1922 area. And that's the only time I'll enter that trade. So here for US 30, we have a double SAR. This is the 15-minute time frame. This would be a break and continuation. So again, for this trade, we would have to wait for another 15-minute candle. So this is a possible break and continuation for buy. Then you again for this one, so it's still not validated. Even the break candle has not validated, but that's a possible trade in the next 17 minutes. Gold, there's nothing on the 15-minute, nothing on the 30-minute. So other than the hourly time frame, EU has an entry here. EU has a test and rejection. So here, to be honest, like not like I don't like trading EU, but it just moves a little too slow for my liking. So this is a test candle. This is a rejection candle on the 30-minute time frame. So again, FX pairs will give you a white stop loss. So this would be a 25 pip stop, 50 pip TP. So the trade is running, but again, I would rather take the gold trade than not EU trade. Also, again, right, the entry relative to the SAR is like 50% of your stop loss. So again, to me, that's a red flag. I would rather wait for EU to come here. So this, the trade has already validated on the 30 minute, but for me, I just prefer not to, because if you guys saw the weekly recap video yesterday, those two losses we took, there were small losses on US 30 on Friday. It was, US 30 was overextended. So it's just, as much as the losses might be little, you just want to try and start getting rid of what's causing you losses, no matter how little it is. So this one, so it's not a possible, so it already validated, but for me, I'd rather wait for EU around 1.05. See, so we have our trade set up. What else? I feel like I'm missing something. All right. See, I want to check something with the rejection indicator. So with the rejection indicator, I told you guys put it on the 1 hour time frame. So this 1 hour time frame, we are I would want to see US 30 come down in this zone, and then it would possibly give us a rejection for a buy. But for all other timeframes, for all other instruments, so nothing for gold, price is below. I'm looking for buys. Price is below the HMA, right? So price is in a red zone. So I just go ahead and turn it off because I'm not, it wouldn't give me a valid buy. For EU, same thing. Price is on a red, in a red zone. So in the indicator itself, let me go over it on a bigger chart. So in the indicator itself, God, this thing is freezing. In the indicator itself, here you have a signal filter type. What personally I'm doing, and I put this in the Discord, I filter based off of moving average. So you guys remember, part of the rules for the rejection indicator is that you want to buy when price is above that moving average, the HMA, and you want to sell when price is below. So if you do no filter, you'll see that you're getting buys when price is even, how do I put this? You'd be getting buys if price is even below the moving average, but you want to do buys if price is above it and sells when price is below it. So you can see here, like in this current chart right now, I do not have any filter. So you can see that's why we have a lot of buys. And for me, I've only turned on buys only because I'm only looking for buys on US 30. So I turned off sells in the settings so that I don't get confused. Now, the issue with trading without a filter is that you just have all these buys on the screen. So you might get confused and you might FOMO into a trade. What that might lead you to do, you might end up, you see these buys that are at the very top, you might end up taking buys at the highs and sells at the lows. But if you apply the filter here like I do, you'll see that the buys reduce. So those buys that are at the top, they kind of get taken out and you're now getting the buys at the lows, which is what you really, really want. So you can still FOMO into these trades, but you have, and I'm not advising you guys to FOMO, of course, but you have a lesser probability of getting messed up, getting caught buying at the highs or selling at the lows. So personally, I advise you guys to do a moving average filter. If not, if you can handle having a bunch of buys, well, that's fine. But personally, I'm applying the moving average filter for my trades. So this one, gold, again, looks like gold will be overextended. So this trade will validate. Again, I always tell you guys, always look at what the wicks are telling you. So you see this wicks from the bottom, they're telling you that there's a lot of buyers sitting here on gold. So just by this alone, we know that our bias is good for gold. Now, we might not get the trade failed, but right, this is just the thing. You just, like, if I was looking for sales right now, I would be probably getting burnt or whatnot. So I would rather miss a trade, but I know that price just left me behind instead of FOMOing into a trade or chasing a trade or being caught on the wrong side. So for me here, I know that my strategies, are still in check. And for those of you, for example, who trade Asia, there was that buy on gold, a rejection buy right here. Price was rejecting off of, sometimes you have to zoom a little bit away to see that some of the past SARs, but you can see here at 3 a.m. or during London Open. No, actually, this was last night, 11 p.m. So we had this buy. It was rejecting off of an SAR. It wasn't the lowest candle of this retracement. It was within the green zone. So this was a valid buy. But for me at that point, I was even asleep. So you just have to commit time and just catch some of these trades. And in instances like this, to be honest, I don't think we'll get a trade today on the live session. So if gold goes all the way up here, even though gold comes back to this zone, I won't be looking to get at it on the 1 minute time frame, because what is gold doing right now? It's breaking. It's possibly going to break. There's a double SAR here. There's another double SAR here. So it's probably going to do other setups at the top. So if gold closes like above this zone in the next 11 minutes, at this point, this trade is invalid. It's still valid, but given that gold will have created setups with other double SARs at the top, I wouldn't advise you to wait for a retracement and catch a buy down here based off of this trade. So if gold closes above these zones, which means it will create a new setup based off of these double SAR zones right here. If gold closes, comes back down below, I would advise you to start from scratch, wait for another. So if it comes back down, it would probably give you a test and rejection entry. Or if it breaks down that area, it will give you a break and continuation possibly. But if gold closes where it is right now in the next 10 minutes, which is likely, I don't recommend you guys to wait for this trade right here. So just move on to the next setups, but you'd have to wait for other hourly candles. But anyway, anything can happen in the next 10 minutes. They can flush this thing down here. So we'll see. So maybe EU might be the only setup for today. So we'll see what EU does. So what I want to see EU come back down to 1.05389. And at that point, I can go to the 1 minute time frame, or because it's an FX pair and moves a bit slower, I can enter it, just hammer a buy down here. So, but let's see what EU is going to do when it reaches this zone. So US 30. So let's see. So in the next 9 minutes, this will be, the trade will validate. Looks like the break and continuation will validate. But again, always ask yourself, what's a red flag? So I'm not trading with rejections on this lower timeframes. So if this trade closes here, what's a red flag for this trade? The entry relative to your SARs is like 150% of your stop loss. So this is those instances where if this candle closes here, I'll wait for US 30 to retrace in this zone. And then if US 30 comes back in this double SAR zone, I will drop down to the 1 minute and look for a 1 minute entry. Now, if US 30 closes here, and then the person who would have taken the trade goes up in profit, and the person would be at a 1:1 risk to reward, and they set break even. Guess what? I forget about that trade and I delete this trade. So let's see what happens in the next 8 minutes where US 30 will close, and what will happen in that next 15-minute candle. So if that next 15-minute candle spikes up such that somebody who took that trade, no matter how extended it was at a 1:1, I go ahead and delete it, because that means that if somebody else had taken it, they would be at break even. And if I'm waiting for a retracement, I would possibly get stopped out. So let me know if you guys have any questions. I don't see, I was hoping we had something on gold, but even this zone, I was hoping there was like a double SAR, but this was just a single SAR. Yeah. Even on the 30-minute, there was nothing. So let me know if you guys have any questions, but I'll hang around for that next 20 or so minutes to see if US 30 validates or EU. Let's see this breakout scanner. See what zones are here for US 30. We have an hourly bearish. We have a 4-hour bearish low here, 30-minute bearish zone, hourly bearish zone there. We have a bunch of sellers sitting there. Yeah, US 30 might come back down. We have a 4-hour bearish order block there. And you can see the trend looking, I know I haven't worked with trend lines in a minute, but we are trending to the downside here. Yeah, so we'll see. I know gold had a daily bearish order block somewhere here, daily bearish low, but it broke that. It's testing a daily bearish high. So if you guys remember when we used to trade order blocks, this daily order blocks rarely come up. And at this zones, this is when you have only one chance to sell or to hit a sell. But I know I haven't traded that way in a minute, but we do have a daily bearish order block here at 1929. And if I turn on the zones indicators, we have a bunch of sellers. And you can see in that little zone, we have more sellers where that daily bearish high order block is. So this is what they might use to bring gold back down. Probably not now, but we are testing that bearish OB. So let's see, US 30, 5 more minutes, see what's gonna happen. I just wanted to see the breakout scanner. Nothing. It's the crosses indicator. I thought today would get some nice setups, but it just might come back later. Also, I think gold has a 4-hour on the 4-hour time frame, has a break and continuation. Okay. On the 4-hour gold, if I wasn't wrong when I was looking at it, if I go here, look at the 4-hour. Yeah, we have a break and continuation. So this is a break candle. This is a continuation candle. This trade will validate in the next 3 hours. So at 1 p.m. later on today, again, I'm hoping they bring gold back down to 1923. So that will be a nice buy on the 4-hour time frame. And also on that hourly time frame, it's still in that double SAR zone. All right, 4 minutes. Okay, so I like how they're bringing US 30 down. So we'll see. Trying to think this through. So there's a downtrend. See something. A minute. I'm trying to think this through. So red flags for this trade. Price is in a downtrend. We have a 4-hour bearish OB. See, we have 3 minutes. Let's see what price will do in 3 minutes. CS 30. What do you guys think? What are you guys seeing? So I see a downtrend on this 15-minute time frame. And now that I saw that 4-hour bearish OB, and you can see this wicks from the top, right? So I think this is what I'll do. If price closes in the next 2 minutes such that this break and continuation is validated, what I'll do, I do see, I think, here what I do see, I think they might stop hunt people. So either way, my bias, it still hasn't changed for US 30, but based off of this wick, like when I look at this wick right here, This tells us that there are sellers there, right? Heavy sellers. And once we turn on the order blocks indicators, we see a 4-hour bearish order block and a 30-minute bearish order block. If we turn on the zones indicator, we have sellers sitting there. So there's not really a lot that buyers can do here. So looking at where US 30 might head to, I think we had an hourly. Again, the only reason I'm looking at the markups is because I saw that downtrend. We have an hourly bullish high at 33,764. So, okay, this is what I'll do. If this trade validates, I'm not going to take it immediately. I'll wait for a 1 minute confirmation on the 1 minute time frame. So it looks like it would set up so nicely such that the entry is next to the SARs, but I do see them manipulating price to the downside and then pushing it back up. So let's see how it closes. In the next 40 minutes. Okay, so that's perfect. That's actually perfect because I don't want them to close it next to here. So if they close it away, so this is good for me because remember my new rule is if a trade is overextended, I'm not even using a half lot size. I'm just always going to wait for a retracement in the SARs. So this is perfect when this happens, because if they close it up this way, it's already a red flag for us because the entry relative to the SARs is like 50. This is probably 60% of our stop loss. So that is perfect because if they try to stop hunt people, guess what they'll do? They'll drop price back down. And for us, we'll drop down to the 1 minute and wait for an entry on the 1 minute time frame. So this is what I want to see. I want to see US 30 coming back down. So this is the importance of waiting for an entry down here, because you see, as much as you can take this trade and it's here, the SARs, yes, are not as far to the relative to your entry. They're not too far. But again, for me, I do expect that manipulation there. But if somebody who is in this trade and goes into so here's the thing, the trade has already validated. So, and I always tell you guys, you do not have to trade like I do, exactly like I do. So the trade is valid. It's only because for me, I want to be a little safer. And I've seen some of these setups before, especially this long wick from the upside. This is personally for me. So I'll just wait for US 30 to come back down. So at this point, I will go to the 1 minute time frame. So I'll drop down to the 1 minute time frame, and then I'll wait for price to come back down there. So I'll remove the extension of my SARs because I do not extend my SARs on the 1 minute and 5 minute. So what I want to see here on the 1 minute time frame, I want to see price dropping. Again, if you're already in buys, I hope price goes to TP for you, but I would want to see price dropping on the 1 minute time frame, and then it recovers back up and forms a live SAR, and that is the trade I will personally take. But just keep in mind the trade already validated, so just make if you have other confluences for a buy, the buy is already valid and you just be in and out of profit. But for me, I'm waiting for possibly it to come back down. Okay, so here's that trade we are waiting for. So it's no longer a possible test and rejection. So I go ahead and delete the word possible, and then I do. So it's already a test and rejection. You had this test candle, then the rejection candle. So of course the trade validated up here, but right, what's a red flag? Relative to your entry, your SARs are like 200% of your stop loss. So of course, unless you can stretch your stop loss to have like 70 pip stop loss, in which case you would have to double in order in case you want a 1:2, you'd have to do like 140 pip TP. Unless you can afford to do that, if you're doing a 30 pip stop loss and 60 pip TP like me, how I do for gold, and you're willing to take that risk, sure, feel free to take that risk. Again, you don't have to trade exactly like I do, but personally, I would wait for this trade here. Also, this hourly candle closed above a double SAR zone. So this is another break and continuation possibly forming. So for me, since this trade, it looks like it might get to a 1:1. So the 1:1 would be 1927. So if this trade gets to 19, so I'll just mark this up for myself so that I know when to stop looking for this trade. So I'm assuming that somebody took this trade. Now, if price gets to this zone before coming back and tapping me in here, so if price gets here, I'll know that for somebody who took the trade after it immediately validated, they would set a 1:1. They would set a break even, or they would set break even once they achieve a 1:1. And the 1:1 for that trade is here. So if gold gets to here first before coming back down to 1922 right now, I will delete this order, and then, I'm sorry, I'll delete this markup because I'll consider that trade has been invalidated. And then I'll then wait for a break and continuation setup of this next SAR zone. So right now, even for me, for gold, it's just a waiting game. EU. So EU did not come back down. Unfortunately, did not come back all the way down. I don't know if anybody caught or took this EU trade when it was here. So that's why it validated in. But for me, I was just waiting for a retracement. But if you took it, you should be in profit for EU. So for me, I'm just trying to be a little bit more safe. And you can see US 30 is coming back down. So this is what I want to see. I want to see US 30 in this zone. Exactly why I didn't want to take the 15-minute entry. So I want to see US 30 in this zone. And then since it's already in this zone, I want to see it. So it's currently testing this zone. So now what I want to see a live 1-minute SAR. And when we do get that live 1-minute SAR, I'll go ahead and take that trade. So this is what's called opportunity cost, right? For me in EU, yes, I could have been in profit, so I might miss that trade. But on US 30, if I'd taken that 15-minute trade when it validated, yes, the trade was valid. But since I identified that there was a red flag to this trade, and upon backtesting, I'm like, yo, if only you wait, right? Price will always come and fill you in. And I told you guys, based off of what I was seeing here, based off of the red flags, I do see them coming down to manipulate price back. So right now in US 30, I would be in drawdown, and then I would be like, hey, you already knew that this was probably going to happen. So you want to, if you're trading, you want to be in a trade, and your mentality is such that if this trade hits stop loss, is there anything I could have done better? So if I was in this 15-minute trade and I'm in drawdown and fingers crossed it hits stop loss, and then I go ahead and ask myself, hey, Michael, is there anything better you could have done to avoid that trade? Then I would have been like, yeah, I identified there was a downtrend. There was a long wick from the upside. So there was some red flags there. But if I take a trade that's valid and then it hits stop loss and ask myself, is there anything I could have done better? And then I say, no, there's nothing you could have done better. It's just one of those days. Then I feel like personally, I would feel better as a trader that way, as opposed to taking a trade and losing and knowing that there's something I could have done better on my end. So right now, what personally I'll wait for the 1-minute time frame and wait for a setup there. So we want this zone to be tested, and then we want volatility in the market. Let me see something. There's something else I'm doing here. What time is it? I'll turn this off. There's another system I'm running here. I always forget that it's running. All right. So here we just want a 1-minute trade. Okay, gold, what was this? This looks like it's a double SAR on 30 minutes. There's a 30, is it a 30-minute? I don't like extending my SARs too far. Just a second, I think this 26, this is 30. What was this? Maybe this was 15-minute. Anyway, if it disappeared, then it is what it is. I think that one disappeared. No. Anyway, I can't find this zone, so I'll go ahead and delete it. $19.24. We have a double SAR. You say US 30?
Yes.
Yeah. Okay, let's see, 48 seconds. I don't want, I want this to close below the SAR. That spike. So again, same thing, overextension. Same thing. So in the next 30 seconds, let's look at it on the 15. Give me a second. So you can see, right, that zone is critical. So we already know. So now we know we also have buyers at the bottom here. 16 seconds. To be honest, no, I'll wait. I'll wait again. I wish that pump wasn't too heavy. Yeah, but that's the 1 minute entry. But for me, I'll wait. Because even here, right? Look at the SARs. So technically the SAR you're trading on the 1 minute is this 1 minute SAR. You're not trading this 15 minute. I would want to get it. Yeah, this big candle is just my red flag. But anyway, yeah, that's the 1 minute entry right there. If you guys want to take it, for me, I'm still gonna hold it. I don't know. Today, I feel like I have cold feet. It's just one of those times. So there's there's an exact setup that I like. Yeah, but that's the 1 minute entry. But personally, I'm not in it. But that's the 1 minute entry. I just don't like seeing these big candles, man. But that's the 1 minute entry I was waiting for. So if you guys want to take it, feel free. So it is valid. It is valid. The only thing I don't like about it is this. It just happened too quick, this big 1 minute candle. But that's also good because if you look at this trade on the 15-minute time frame, and even though the trade, if it hits TP, I'm not going to count it as an official trade. That's fine. But here, again, always ask yourself. So you don't have to even use the markups indicator. You don't even have to use any indicator. Once you see some of these huge lines or wicks, either to the bottom or to the top. So if you see a big wick from the top, and you can see that spike. If you see a big wick from the top, know that there's a lot of sellers there, right? If you see a big wick from the bottom, you know that there's a lot of buyers there. So the worst markets, and which is how consolidation ideally happens, you'll see candles in a range, and all of the candles have big wicks to the top, big wicks to the bottom, right? Because you have a perfect balance of both buyers and sellers. So here, what you're seeing, yes, we have these big wicks to the top, but also you have these big wicks. Well, they're not as big as the sellers, but you have wicks at the bottom. And the best thing about this one, price is rejecting from a double SAR zone. So the zone that we marked up. But so for me, ideally, what I would want to so I'll do the same thing I did with gold. If any of you guys who entered, if this trade hits this zone, I know that for you, if you guys took it, you're already at a 1:1, right? So if you're already at a 1:1, I'll go ahead and I'll still monitor the trade. But if you're not in this trade yet, and the people who entered it down here, when the trade gets to this zone, go ahead and set break even. So if this trade gets to this zone before any retracement, I'll go ahead and I won't even think about entering the trade. But yeah, that was the trade. I don't know today, to be honest, I don't know. It's just, maybe it's the change in weather, but that was the trade. But it's not that I had cold feet. Is this, this huge spike up like that, huge candle. So, and if you guys were on the live session with me on Friday, you probably saw like one of the first trade we got stopped out with on Friday was due to a huge candle. So, it's just a rule I'm trying to subconsciously put in myself, such that if a trade is overextended, I am not taking that. So it's actually not cold feet. It's just, I'm just trying to subconsciously train my brain to see that. Where was I? So gold, these are 30-minute zones. So gold here, this is a break continuation of a double SAR here. Gold, this is another break and continuation. So gold is just spiking to the upside. Let me check some of them, my other accounts. Okay, perfect. That one, two. So either way, even though I'm not trading, right, you guys know, as much as I'm still testing my bot, like literally it's just been taking gold buys. So I still have other accounts that automatically trade even without my manual intervention. So that's why I normally tell you guys, just learn the strategies and come up with your own rules such that if Michael isn't trading, does not mean that you're not trading for the day. Two buys 61. An account I need to restart. Yeah, if you guys have any questions, I don't know how US 30 is. There you go. So if you took the US 30 trade, go ahead and set break even. So I didn't take the trade, but that's what I would have wanted to see. My only thing was this huge candle, but if you're in that trade already, set break even. So at this point, I know that and again, if you're in profit, I hope, right, it goes into full TP. But in the off chance that this trade retraces and the people who had set break even get taken out at break even, I wouldn't now want to be taking the same trade because I missed the trade. So I don't want to be chasing a trade where I'm entering a trade that I would have already got taken out at break even if I entered when I was supposed to enter. All right, so if you're in that trade, set break even, and hopefully, I hope it goes to full TP for you guys. Yeah, EU, same thing, right? So opportunity cost. So today is just one of those days for me. I miss, and I don't feel bad, right? I'm just happy that everything worked out based off of any analysis that I did. So I know that there's still other trade setups that are coming in. But for this EU trade, so hopefully you guys can see. So the most important thing, even forget about whether the trade goes to full TP or goes to break even or stop loss. The key thing, can you identify a break and continuation? Can you identify a test and rejection? Like, for example, here, the way I've marked up test and rejection, are you able to see why it's a test and rejection? So long as you're able to see that, you will always have these setups. But if you cannot see what a test and rejection is, or if you cannot see what a break and continuation is, then to be honest, that's where you should start. But for this trade, again, same thing I just did for US 30. If this thing achieves 25 pips, right? I know that this trade would be at break even. So there's no use for me waiting for the trade to come back down here, right? Because for me, I'm waiting for the trade here. But if the trade achieves this point, I know that, hey, I'm done with it. Yeah, but there's nothing else. Let's see. 15-minute time frame. There's no SARs on the 15-minute for now. Anybody take the US 30 trade? Also, if you guys didn't take it, why didn't you take it? Is it because I said there was a red flag, or you're just observing price?
Yes, the red flag.
Red flag. I mean, it's fine. You know, we get more perfect, not perfect, more ideal setups than red flag trades. So it's not a big, right? It's not a big deal. And for those of you who trade smart money concepts, what is this called? No, not smart money, ICT concepts. What's this zone called? The one I just drew. So this zone, what is that zone called? That's a fair value gap, right? So a fair value gap is when you have an imbalance in the market, or I guess an imbalance. A fair value gap is created after an imbalance. So when, in this case, there was more buyers in the market. So you normally identify these gaps when there is a 3-candle formation, and the middle candle is the one that had a spike either to the upside or to the downside, which means, so in regular candles, the first and the third candle, depending on the sequence you're following, the wicks of the first and third candles almost always will intersect or close out or whatnot. But sometimes you have the second candle in a sequence being a candle that has spiked up. So you'll see this mostly during news events, during market open, such that it spikes up and creates a new structure or momentum to the upside. And then you have that imbalance such that the previous and the next candles, the wicks do not intersect. So that's also what's called a fair value gap. So here, what I was looking at, like for you guys who watch ICT, he likes taking trades in these fair value gaps. So he would, if he sees a fair value gap being set up on the buy side and he's looking for buys, he would wait for a retracement into that fair value gap zone and take trades in there. So that's why, it wasn't just a red flag because it's a huge candle. So that's the idea behind why it was a red flag, because there was that imbalance in the market. And sometimes after these imbalances, you expect some sort of correction in the medium term in order to bring balance back to the market. So it wasn't, I just didn't look at it and just because it was huge candle and I chose not to take it. But you can have both. So you can have instances like, for example, when the trade we took on Friday, we took it, the trade validated, but the trade immediately went to stop loss, right? But you'll have trades that you can take as much as price is overextended and the price will keep shooting up towards your take profit. So that's where like the approach I'm using right now, you just got to know when to weigh and when you're willing to take that risk, especially once you have a red flag like an imbalance in the market. So you can see here, like for this trade, if it comes back and hits break even, will I have lost anything? No. So I'll ideally be in the same position like I was in if I had taken this trade, right? So I would be, if this trade gets stopped at a break even, even though I had taken that. So this is where, again, you should reflect on the trade and you're like, okay, how do I feel if I was in this trade? So in this trade, it shows you that if you had taken it, possibly you'd be getting stopped out at break even, possibly. So you don't, at this point, you don't feel bad about yourself, right? So think of it in the opposite way too. What if this trade went straight into stop loss and you ask yourself, is there anything we could have done to prevent it? And then if you know that there's something you could have done to prevent that loss, then you know that's what you improve going forward. Anyway, is there any other pairs or instruments you guys want me to analyze? I don't even think personally I'll get any trades today. Nothing literally. So EU, same thing here on EU, right? So it's already at a 1:2, 1:1. So anybody who was in that trade at this point, they would have been at break even. So at this point, I go ahead and delete this because I know anybody who was already in the trade would be at break even. So at this point, I don't know, did anybody take EU as EU or not? I'm guessing not as well because it was a red flag. But what I'll say with EU compared to gold and US 30 move much heavier or much faster than EU. So I want to say this. In EU, you have a lesser likelihood, even though the stop loss is just 25 pips, you have a lesser likelihood of getting stopped out or faked out than with gold and US 30. Because remember, it's all about volatility. The thing with pairs are good with the trend because once they start catching the trend, their retracements are not that heavy. But with gold and US 30, before they catch a trend, they can, their movements can be so swift and so huge. such that you can get manipulated. But with EU, honestly, I normally like EU setups with what is it called? With SARs, because here, for example, you can see where the 30-minute validated. So look at it here. So this is a 30-minute candle. So consider that on the first time, or first place. That's a 30-minute candle. The SAR zone we are trading is down here. So the SAR zone is about 40-50% of your stop loss. Now, if that was gold on US 30, like the same thing for US 30, I wouldn't have taken it, right? But here for EU, consider this is a 30-minute, so this is not a 1 minute time frame, this is a 30-minute candle. So to have a 30-minute candle drop all the way down here and break this wicks, break this double SAR, break this other double SAR that's already down here, price would, there's no, that's not manipulation, that's not stop hunting, that's just a change in the trend of price. So with EU, I would say you may have a little bit more leeway to trade, to enter the trade a bit further from your SARs than gold or US 30. But anyway, so this is gone, would be in profit. See if US 30 got stopped out. Okay, so US 30 is still back up. The other thing you want to check is, let me see if we got that. Yeah, that rejection. I still need to, I haven't really back tested rejections on this other time frames, but since this is the 15-minute zone we are trading, anyway, we'll test it going forward, because what I would want to see going forward, if we expect price to come back down to our zone. So in this instance, this was a good example, right? If we're expecting price, because the entry validated up here on the 15-minute time frame, but we were expecting price to come back down and create this live SAR on the 1 minute. If price gets in this zone and we get a rejection using the rejection indicator, we get a rejection signal, this might also be a possible, again, right? I don't know, I haven't backtested, I would need to backtest, but this might be a rejection entry. So at this point, if you're using this, so once you come down to the 1 minute, it's either you use the rejection for entry or the SAR, but don't use both. The reason I'm saying that is, and I think for me, the SAR is always safer compared to the rejection, because here you can see the trend had already started changing to bearish, right? But applying the rejection strategy by itself, this was a valid rejection buy, because we know price was bouncing off of an SAR here. And if I extend even the 1 minute SAR, you'll probably see we have some SARs down there. No, actually there's none. So never mind. So it wasn't a valid SAR. It wasn't a valid rejection. There was no rejection off of an SAR, but it rejected off of the 15-minute time frame. Yeah, but yeah, I just say for this lower time frames, just stick to the SAR by itself. We'll just have to what is it called? We'll just have to do more forward testing with this rejection indicator on this lower time frames. Okay. Gold 32 minutes. So gold, so again, gold, this one would have achieved break even, right? Yeah. So same thing for this trade, it validated up here. So you'd know. So I'm not waiting for gold again at 1922, because I know the person who entered this trade here when it validated, they already achieved a 1:1 risk to reward up here. And right now they would have just gotten taken out at break even. So I go ahead and delete my setup. And now I have to start all over again, looking for setups from gold. So gold, what do we see here? This is a double SAR zone. This is a break. This is a continuation. So we have a possible break and continuation again. So if this current hourly candle in the next 32 minutes closes above 1927, that will be a buy for gold. Again, same things apply. You want the trade, or you want the candle to close close to your double SARs as possible. So you want the entry to be right there. Right there. Again, if it's farther, you just wait for retracement. So that would be the trade I'll be looking at in 30 minutes. If this trade closes, I would want for it to close next to 1927 because I'm about to hop off the live session. If this candle closes next to 1927 or closes exactly where I've marked it up, because that's where I want this hourly candle to close, I'll be taking a buy on gold. If this current hourly candle closes in between this SARs, the trade has been invalidated. So for the trade to be valid, this current hourly candle has to close above 1927. It has to. Anywhere lower than that, the trade is invalid because the continuation candle will have closed below or within the SAR level. If the current hourly candle closes all the way to the upside, again, I would wait for a retracement, and then I would watch it from there. But again, let's look at what gold is telling us. When we look at this wicks from the top, gold is telling us we have a lot of sellers here. But also on the bottom, gold is telling us we have a lot of buyers sitting here, right there. But if that trade closes, I'll be taking a buy on gold. So I'm still expecting this setup on US 30 on the 1 hour time frame. So what I'm hoping for is US 30 to retrace back down and give a buy rejection right here in this zone. But also US 30 may give a buy rejection where it currently is. So it doesn't have to retrace back down to this zone, because you can see this wicks. And also looking at the HMA color, we are getting into the green zone. Also, what is this? So let me remove this for now. What setup is setting up here for US 30 based off of this double SAR? This one right here. So this previous hourly candle, which we had talked about, this is the test candle. This is the rejection candle. So we also have a possible test and rejection setup buy for US 30. Here, I'll go and do this 50 pips. Stop loss 100 pips TP. So I would want this current hourly candle to come back and close somewhere down here. But if it closes like extended like this, again, I just wait for US 30 to retrace here. And hopefully it doesn't go like straight into TP or straight into like a 1:1 risk to reward. But that's another trade setup for US 30. So as much as I missed this US 30, look at, yeah, and you'd be out at break even at this point. So this trade also is gone. So I didn't really miss anything by choosing to wait. So at this point, even though US 30 comes back in this zone and gives me a live 1 minute SAR without this overextension, am I going to take that trade? No, because the people who took the trade, the original trade, just got taken out at break even. So at this point, I would go back to scratch or back to the beginning and look for a break and continuation, or look for a test and rejection. So that's literally how I trade. So there's nothing different that I do that I don't do here on the live session. Yeah, so I'll just wait for another. So based off of where price is coming back, price may still test the same zone. So keep in mind, it looks like this is a static zone for US 30 because you can see this wicks. So what US 30 might give here, it might give us another test and rejection entry. So I know that I've already marked up my possible entries on US 30. And if it's giving a test and rejection, look at this zone, 33,871. If we go to the 15-minute time frame, what's the zone? What's the double SAR zone? 33,885, 33,876. So US 30, the more US 30 is coming to this zone, I know the more it's validating my entry on the 1 hour time frame. So keep in mind, this 1 hour trade is closing in the next 27 minutes. So what I would want US 30 to do in the next 27 minutes, I would want it to come and close somewhere around 33,875 area, which would also line up with as a retest of this double SAR on the 15-minute time frame. So I didn't miss anything. I would have just gotten taken out at break even for gold, for US 30. EU is the only trade that I could have been possibly going to full TP, but that's what's called opportunity cost. So I'm not, I don't feel bad about anything. So now I know that there are trades that I'm waiting for, and I just have to wait another 20 to 30 minutes. So I'll just go do my own thing for like 20 minutes and come back and see what validates. Any last questions from anyone? Perfect. So again, in the next 26 minutes, same thing for gold. If gold closes above below 1927, this trade setup is invalid and I'm not looking for it. I would have to then wait for like a break and continuation. I would have to wait for gold to come back up, break that double SAR and give me like a possible break and continuation. So once you apply these rules, yes, you won't be taking as many trades as maybe you might want, but you don't need a lot of trades. Like for example, here, like for that trade I took yesterday on US30 and had 3K. Yes, it might look like I had 3K, but actually in this account, and it's a 200K account, I'm actually in drawdown. I am at 195K because the previous week, right, I'd taken losses. I took a loss. I don't think the Friday losses are here. On Friday, I took a 3K loss. Friday I took a 3K loss. This day I took like a 4K loss. This was a different account, but in this account, right, I'm down 195K. I was all the way at 192K, but because of this win, I'm up. Right, this gave me like what 1%, 1.5%. So you just have to wait. If you're using these rules that I give you, yes, you might not get 10 trades a day. But so long as you're doing like that 1:2 risk to reward, so long as when you achieve a 1:1, you go ahead and set break even, over time you'll have like a good win rate. And so long as you're not over leveraging or you're not revenge trading, losses are just part of the game. But if there are no last questions, I will catch you guys tomorrow. Just be on the lookout for this 2 trade setup. So if you guys want to take screenshots, feel free to do so. But it also looks like none of them will. US30 might validate, but it might validate all the way up here such that it's overextended. Gold may end up invalidating. Looks like we might get closure below here. But this is the best thing with gold. We have 24 minutes for this hourly candle to close. So if buyers, you see here where gold is, we already know there's buyers sitting here, right? If we go and try and use the order blocks indicator, we might see a certain, so right now we're in a daily bearish order block. Okay. But here, 1920, we have an hourly bullish high, but again, it's overridden by the daily bearish order block. So I don't see this buyers being able to push price all the way up. So this gold trade, unfortunately, we might get it invalidated. But if we get buyers that have the energy and the momentum to push price back up in the last few minutes and close it above 1927, that should show a lot of buying potential, because you see this wicks from the bottom, right? That tells us there's a bunch of buyers that are sitting there. So just observe those 2 trade setups. If it does validate, just know for me, I'm going to take them if it does validate, but it has to validate next to the SAR level for me to enter it instantly. If it validates away, then I have to wait for a retracement. If it does not validate it, if it does not validate at all, I am done with that trade and nothing else. But other than that, I will catch you guys tomorrow. All right, see you guys.